Good morning. It's Wednesday, September 25th, about 6 a.m. Central Time. That's the Gulf of Mexico right there. That's that hurricane developing right over there. So just want to give you guys a clue as far as how close that is to where I work at and where my office is at. So here I am right back in the office right now. So a little bit of alarming as far as, where that hurricane's at and everything else. So I'll be monitoring that all day. Now, looking at the precious metals overnight, gold futures up $2.80, 26.79, hit an all-time high last night, 26.94.90. Remember something that I discussed is that after that first interest rate cut, historically, after a hiking cycle, gold futures have rallied about 6% on average within the first 30 days. So we'll see how that plays out. We need to do a little bit of math there, but if we get anywhere close to that, I think that might start to run out of steam. If you look at October, some of the different economic indicators are going to change just a bit. Some of the economic readings, gold futures could stall out at that level. So little bit of not really concerned, but I think that's where we get our first opportunity for a re-enter on the October contract. Now looking at silver futures, down 28.5 cents here overnight, 32.13, hit a high 32.61. The yesterday's high was 32.60, up 4.3%. Remember what I told you yesterday was that if you look at China, I told you that copper has to rally in order for silver to rally, and you want to see that type of momentum higher, and that's what we saw yesterday. So we saw copper up 4.13%, was up about 2.5% here at the start of the day yesterday, and I said that with silver futures only up about 0.5%, that I felt that was the best opportunity for silver to rally. And what did it do? Ended up $1.35, hit a high 32.60. Now, if you've been following me for a while, I said that if we broke over the 30.50 mark, 30.54, that the chances are that because of that dead air, we would extend up to 32.50. That was that recent high that we saw in that silver market. So it tested that. Now, a lot of the analysts that cover China specifically, they're coming out and they're actually downplaying the efforts by China just by doing that 50 basis point reserve requirement cut. They still feel that they're not going to hit that 5% growth target. So that kind of rhetoric has pulled down a lot of these assets. So again, you check all the China related boxes. You look at crude oil, down about 1.27%, down 92 cents. You look at the Australian dollar, down 12 ticks, down just a little bit here. You got soybean futures down almost 1% at 10.33, and then silver and copper both pulling back. So copper 4.46, down about 0.5%. Platinum down $3 at 9.95. We want to quote that January contract. The equities are off just a little bit here at all. So you look at the gold silver ratio yesterday, it dropped down to about 82-1. So we look at the chart here, it did break a recent low, but not really extending that. We really want to see the gold silver ratio get down to about 71-1, and we'll have to do some math on there, figure out where that puts silver at in correlation to the gold market. And our upside target at the year end on gold is about 27.50. So we're already closely achieving that level here. So what we'll do is we'll rerun some math here, figure out where silver should be in correlation to that gold market. Now, giving you kind of some backdrop on the silver market, managed money is really dominating the position. What is managed money? Those are the guys like me that are working with CTAs and different funds and things like that, where they are establishing positions in that market. You look at the producers, they're reiterating a tighter physical balance. Real rates are dropping. So how do you judge real rates? Start to look at the 2-year yield. It's at about 3.53% right now, and that has been dropping. The 2 versus 10 has gone positive here. So the yield curve has gone more normalized in the markets. So you want to pay attention to that as well. And the dollar index, throw that up on your chart. About 100 has been the critical level here. So that market has come down and slightly retested that. Now, why I brought back that managed money is that if you look at managed money, others, and non-reportables over the week of September 10th to the 17th, they added about $2.6 billion in longs on the silver market. Silver rallied about 8% during that. That was the second largest increase in 5 years. Managed money alone made up $2.3 billion. Again, managed money, that's like our fund. So if you want to know like what the performance of our fund that we run on the metals side and on our global opportunities, reach out to me and I'll tell you that. So managed money in 2019, they only bought $2 billion worth of silver within a week, 3 times in the past. So this is another big move higher, and it reflects in those prices. Now, the drivers of the silver market, obviously tightening is physical. You got 5G, you got solar, you got automotive, you got nanotechnology. So those are some of the things that you want to watch for any kind of developments. Now, going a little bit out of order here. So getting back to what we normally look at, CME Fed Watch Tool, 59% chance that they cut 50 basis points. Today, if you look at the economic data coming out here, you're only going to have new home sales, not a driver of the market of anything we watch. And you have a Fed governor, Kugler speaks, but Kugler does not comment on monetary policy. You're a Fed governor, but you don't comment on monetary policy. Kind of goofy. Sticking back with the silver here. So a few things that I want to note to you guys that follow the silver market. One is that the ETF buyers of silver recently, they're not the ones of the past. So they don't buy and hold. They're not the hodlers that we once saw before. And how you could tell that is you look at the ETF flows. So if you got a Bloomberg terminal, I'll shoot you over all the different things that I look at in the morning. So if you look in May, we had a squeeze on the copper market. I don't know if you can see right there. That was that peak. But recently, when silver futures get up to about 72 billion or $7.2 billion in flows into silver, they tend to come out when futures hit recent technical highs here. And then you could also look at people talking about a silver squeeze. There's no real squeeze on the market. Unfortunately, if you look at the things like how much inventory is held in the exchanges, like in COMEX, it's of 304 million ounces. So if you get up to about 310, we've started to pull back from there. So this has been the flows of the COMEX inventories. And the reality is that I work with a lot of the miners that contribute to the COMEX inventories. So they might hold inventories back until prices hit certain levels, and then they can pump those inventories in. It's like somebody waiting on the sidelines for a small squeeze to occur, and then they could start to put those inventories into place. So say Walmart's running out of water, which it is around here, and you are Aquafina, you might as well flood Walmart with a bunch of water when they are starting to see some declines in their inventories. So that's not something that I would really put a lot of stock in compared to what we've seen in the past in there. You really want to wait for kind of a squeeze on other metals that are correlated. Again, start to look at the copper market, follow the Shanghai, follow the LME inventories, and when you see the squeeze there, then you might see the squeeze on the silver. Another thing that I do look at here, again, when it comes to silver squeezes, is going to be, this is the March versus December spread on silver. So when you look at things like crude oil, and again, it's learning about other commodities and how these things play. So when you have geopolitical risks over in the Middle East and you get these supply threats on crude oil, what happens? The front month, so the November crude oil contract, travels much higher than some of the deferred months. So you'll want to look and compare December silver compared to March, and you want to look at how that spread is played out. It's really been about 30 to 38 cents per ounce. And all you want to look at is December silver and March silver. Put those on your screen, and you can even do H minus Z, and you'll see that spread. So if all of a sudden you saw it go to 50 cents, 60 cents, 70 cents, that's a short-term technical squeeze on the silver market. So that's another clue that you have. Most of commodity trading is just a lot of detective work that's out there. So this is, again, another little video that I'm trying to give you more clues as far as how somebody like myself, who've done this 25 years,
how I look at, interpret the market on a daily basis and kind of the checklist of what I go through on different things. I didn't really touch base too much on the technicals. I believe that they will take some profits here today, but the reality is that I think that a lot of these corrections we're going to see are going to be slightly short-lived. Now, seasonally, gold futures on September 30th until about October 25th, they've risen 13 out of the last 15 years. That's a seasonal tendency, doesn't have to happen in the future, but it's something that we use as a backdrop here for our own type of wave analysis. Now, when you go into October though, prices look like they're going to start to kind of fade off here just a bit before they recharge for the November and December historical rally that's in the markets. So we'll keep an eye on things here. Again, a little bit longer video, but I'm going to try and do a video tomorrow and Friday. We're going to see how things play out. Again, we got this storm. It could affect the power, the internet, water, things like that. So a little bit of concerning here. So if you don't hear from me, stay tuned. That's all I got to say. Again, 312-858-7303. Remember, futures option trading involves risk of loss. May not be suitable to all investors. Good luck, good trading.